All right, good afternoon. So this is our last chapter in our textbook, the first textbook, Accounting for Emergency Responders. And I wanted to talk a little bit about Chapter 10, Cost Planning and Preparing Budgets, which is the focus of this chapter. Putting the budgets together is an important task. As future administrators, you'll be likely responsible for preparing a departmental budget. We'll cover all costs. In this chapter, primarily they're looking at operating budgets. Sometimes in governments, local governments and state governments, they talk about capital budgets separately from operating budgets. But the two go together because typically you have to figure out how to fund both. Capital budgets are long-lived, large ticket items, and the operating budget is operating costs or variable costs, if you will, as you go through time for things like salaries and benefits and utilities and supplies. So anyway, this chapter is a lot of nuts and bolts and putting it together in a fairly complex setting, and that's why I wanted to videotape a lecture for you to give you a little idea of how to frame this chapter. It's important to understand different approaches to budgeting. They talk about this top-down approach, participative and zero-based budgeting. These are radical or fairly different approaches to budgeting. Most commonly what happens is you start with last year's budgets and you adjust those for changes that are going to be made. Sometimes you have to figure out how to shrink, like in the current fiscal situation in Alaska. At all levels of government, administrators are looking for ways to reduce their costs and not with minimal impact to services, but services are going to be impacted. And so you can start with service objectives if you like. This chapter is written for in the focus of a for-profit entity, but it's just as valid for a not-for-profit or other agency. The thing is, you have to look at the different goals. Instead of profit seeking, you're going to be looking at service levels, and you build around that. So you have to have a certain capacity to have readiness for response in terms of, say, home fires or other ambulance responses and things like that. Whatever the service activity is, you need to figure out what your capacity needs are, what your responses need to be. And then you can basically what you're going to do is you put the costs together to support that level of service, that level of capacity. You're going to have so many ambulances, so many fire trucks, or so many work crews for fire response and so forth. And the participative budget allows a lower level massaging or increments or revisions to those broader budgets. The zero-based approach is really radical in that basically comes in and it says you start with zero money and you have to justify in terms of service or performance what you're going to do to get that money. So it would be, you have to justify every cost that you're asking for. And it's rarely used in governments, but sometimes when there's radical cost cutting that has to come in, it's basically challenging every expenditure that's been made in the past and say, do we really need this? If we don't do it, what's the consequence? Okay, so why is understanding cost so important? We spent a lot of time in the last couple chapters understanding the nature of costs, both if they're variable or fixed, and then the indirect costs like overhead. And overhead is an important component in local governments. We need to know how it varies, what drives those costs. It's typically not totally fixed. It's not typically total variable. Usually they have a mixed cost, and you have to look at all these, be able to identify these drivers to really put a good budget together, because what you want to do is you want to have a budget that's based on a service level amount or response amount, and you can see what happens when you change those service levels or when you add resources. The time framing for almost exclusively for all budgets is going to be annual, especially in a local government. You typically, as we'll see in this next chapter or next book on governmental accounting, we have a 12-month budget horizon, and these are usually built into the statute, so there's a legal authority here. The budget goes through a public deliberative process, usually before a governing board like a city council or supervisors, and following that there's public hearings that provide additional input, and finally it's agreed upon and ratified, and then it becomes binding on everybody. And the consequences of exceeding the budget are very detrimental. We'll see. You basically cannot do it, and there's usually a lot of controls in place. So it's important to know how the costs are accumulated, and then also as you to know how much, when you, as the year goes on, you want to know how the budget was put together, so that if it does have to be modified to increment more funds, you can do that before you have to curtail services, if that's feasible at all. Okay, and so there's some kind of interesting diagrams presented on page 554 and 555, and they really illustrate the process. In other words, it's kind of a progression where you start with some revenue forecasts, and frankly, and we'll see in governmental context, the revenue forecast or the tax receipts play a big part in putting together the operating performance. When the local economy or tax receipts are falling, like they are in Alaska, many communities in Alaska, you have to take account of those as you build the operating budget together. In other words, you know you're going to be so much smaller than the funding base is such an increment smaller than the previous year. And anyway, in a manufacturing setting, you start with naturally with the revenue forecast, and from that you can plan your production and purchases, and from that you can determine costs, and then your other supporting operating costs, and then cash flows that are needed. And typically in a government, you're not in exchange transactions. We'll see when we start like that section of the course. So in other words, we don't have transactions with the people that are going to receive the benefits. We typically get revenues from the community as a whole, and there's not a one-to-one correspondence with the expenses we incur. Right? They call them non-exchange transactions. So we're not selling products or services directly to the people providing the resources. It's usually a tax-based support. But you can't ignore that fact. But when we put our operating budgets together, we're looking at components that provide services, and some of those are fixed, some of those are variable. And so our primary interest in this budgeting progression is the operating component. Okay? And so there's a lot of the chapter is dedicated to the mechanics of putting a budget together in a manufacturing context. These tools will serve us well. They're more complicated than we would need strictly for a governmental setting, but we'll see that they'll impose a discipline and a rigor on how we're thinking about budgets that'll be very useful when we have to put these together for a department or a function within a local government. Okay, so I've posted a video, I'm in a lecture on solving some of the problems that I've assigned for homework. Be sure and take a look at those and let me know if you have any questions. I'll post the PowerPoint slides. I've hid majority of the slides because they, as I said earlier, there's a lot of technical computations involved in the chapter that we don't need to go through. I think if you can master the parts that I've assigned you, you're in really good shape. All right.